last week we talked about how I actually was welcoming a correction. I wanted to see the market get back to at least flat on year. Now we're below that. I didn't want it for the reason that we're currently experiencing it, but the world doesn't give you that choice. But I did feel that we were very extended in a lot of areas, and a lot of that has been corrected very quickly. I want to give you a couple of examples that I think are illustrative of what's happening out there. Airlines are down 9% in 2 days, getting worse by the minute. Semis are down 10.5% in 2 days. NVIDIA made a new record high this time last week, now down 18% from that record high. These are parabolic moves to the downside. The S&P 500 this morning at its worst level was off 6.4% from its highs, NASDAQ off 8.2%. VIX at the highest level since December 2018. So what does that all mean? This is preferable to a turnaround Tuesday failed rally that falls apart by the end of the week. And then we sell off into Friday, people worried about, what's going to happen this weekend? This is better. Let's get it all out. MasterCard came out last night, said, that guidance we gave you Jan 21? Forget it. We're not going to do the number.
So did you.
I would like them all to do that.
Well,
let's do it right now.
They're doing it, Steph, one by one. The question is, to Josh's point, you look at some of the losses, whether it's the semis down 10% in a couple of days, a lot of individual names, there's carnage all over the place. What do you do? Do you do as Mohamed El-Arian says, who's already suggested not to buy the dip? There's going to continue to resist, he says. Kramer, don't like to buy into a rally. Well, he doesn't have one now. Yardeni, panic attack may not be over. Tony Dwyer, not yet time for offense. Tobias Levkovich, still more pain ahead. I mean, the consensus is this is still going to get uglier.
Well, it very well could. I mean, I actually think the reaction yesterday and today makes a lot of sense, obviously, because the virus has spread beyond China, that it seems like this virus is going to be with us for a while, a lot longer than maybe we initially thought. But I do think if you step back and say 3 to 6 months from now, is this thing going to be contained? I think there's a pretty good probability that it will be. And so I'm willing to take short-term pain for long-term quality ideas that I'm looking at right now. I'm especially looking at 3 to 4% dividend yield companies, especially 4%. I was talking to a friend last night, and there aren't very many of them in the high-quality space just yet. But that's what I have been doing because I do think down the road I'll be thankful. It very much reminds me of December 2018 when I was buying it a lot, because I thought, okay, this is overdone, and I'm going to benefit in 2019. Now I feel the same way.
Let me pitch you one. ExxonMobil, 6% yield.
No, but I don't.
Highest yield since 1987.
I get that, but that's tied to a commodity. So you have to be careful about the yields. You have to be careful about. I would rather play.
They don't have hedges.
I would rather.
None?
I would rather own industrials.
Which are, by the way, down 8 days in a row.
That's right.
The industrial space.
That's exactly right. So pick your spots within industrials if you do think that this is a kind of a short to medium term correction. By the way, semis down 10%. They were up 100% last year. They could go down a heck of a lot more.
Well, then why pick now rather than wait? Because
I can't time it any better than you can time it, right? So I think if you can find blue chip on sale, that's always been what I have done, and it's pretty much worked. You just have to stay patient and pick your spots. You don't want to go all in. Just pick your spots.
Pete, a whole slew of folks say this is not over yet.
Right.
And they're using words like panic attack, more pain, resist. Pretty strong words of not to get engaged just yet.
And Tony Dwyer, who's been pretty solid, is talking about some of the same types of language that you're talking about there. I think one of you guys brought that up already. But, Scott, I think the interesting thing is to just take a quick look at, and Josh brought up volatility. How about if I give you this number? And I'm not Mr. Numbers, but if volatility has doubled in 5 days, that says a little something about what kind of market we're in right now, right? I mean, it's an unbelievable run to the upside for the volatility index. So, I think it's a great question you ask is, what are you looking at? What are you wanting to maybe buy? And Steph brought up a couple of names. I would say this, and I like what you're talking about with where you get yield, where you're looking for quality, but I'm going into the danger zone, and I haven't pulled the trigger yet, but I'm looking at a name like, and you were giving me a little flack about this, but the good trade out of Microsoft was get out of the stock and trade the options. Traded those options all the way up to $190 a share, just kept on rolling with those things and letting them fly to the upside. The problem now is, do you want to buy those options now at premiums that are far higher than they were, or now is the time to start thinking about taking a taste of the stocks and using that implied volatility to sell against it where you used to get maybe, let's say, $2. Now I'm getting $4. So I'm giving myself a little protection to the downside by using that volatility. So when we get these kind of pullbacks, I am looking for those quality names. I'm looking for an Intel that's down pretty significantly, trading at 13 times earnings. I'm looking at, and I know the runs that these semis have had. I totally get it. And I was I really cut down my portfolio in terms of the exposure there, all the way down to just Micron. And Micron, unfortunately, I own it up much higher than it is now because I own it near $59.50 a share. So I'm not happy about that.
So let's do this. Throw Intel back up for me, if you could. So I want to try and take this a step forward.
Sure.
Make it even more actionable if we possibly can. So you're looking at an Intel, your words. I'm looking at it at 60, let's call it 61. When are you buying it? What is the price that you're willing to buy a stock like this because you think it's been damaged and beaten up just too much?
I think the patient side of me is telling me that there's still more downside. As they sell the rest of the market, I think Intel and some of these names are going to get sold with them. So I look at Intel, I'd say 55. This stock gets to 55, 56 bucks a share. I am very comfortable owning the stock at that point in time and selling calls against it. I like it here at 60, but it took a long time for Intel to break through 60 initially. Now it finally has done that,
It's interesting.
and now it's holding
that. If it
that.
does get to 55, that's going to yield closer to 3%.
Right.
So that goes
and
back
it fits right into this whole category of what you're talking about.
Yeah. Absolutely.
Yeah.
Yeah, well, I think, though, when you go back to your original question of when folks like Mohammed are saying, don't buy the dip, or Kramer saying, don't buy the dip, the reality is most people are already investors. So I think the real question is, and I would say, don't sell the dip, right? Because that's really where, when you're talking to people, not everyone's just sitting in cash waiting to invest. And I think if you are sitting in cash, and I talked about this yesterday, this is a great time to look about what your dollar cost averaging average in. But we would say, we haven't even hit, down 7%, which what we saw in August of last year. To Stephanie's point, in December, January, 18, 19, we had close to a 20% peak to trough decline. We have these sell-offs all the time. But if you go back and ask investors, why did the market sell off in August of 2019 or December of 18 or in 15 or in 16? They won't remember. And so it's like we have this recency bias of everything is so magnified right now. And so it's like everyone says when we're learning Finance 101, buy low and sell high. Where folks, this is what buying low feels like. It never feels good. It can go lower. But I think if you trust, calls are great right now because volatility is spiked. And so it's a great opportunity to have some income and some calls. But also just take out your buying list if you have cash, because this will pass, right? It will pass. But I feel like markets are definitely on the precipice of getting really panicky.
One thing I think